So today's topics are, I've got my business license, I've got my business name, now I'm ready to start a business. I'm legal now. So what do we need? Capital investment. What does capital investment really mean? That means how much money do I have to invest in me? Do I have $500 or $5,000 or $50,000, whatever? Certain different businesses, certain things are going to require a certain amount of capital to start in. I personally started out as small as possible, and when I first started in business, I went out and I worked very hard, and I took all my money that I started with, and I just tried my best to turn it over. I lived very frugally, myself personally, with my family until I got the business going. Okay? So nowadays with equipment and tools, you're going to probably need at least $10,000. So I would recommend when you get even over here, a year or two before you start business, you might want to start saving for some money for that things, okay? And do your best, because when you first start off in business, it takes a lot of desire, it takes a lot of ambition, it takes a lot of self-discipline, it takes a lot of value. Those are the 4 key things that it takes to be successful in life, okay? So you figure out what you need. You don't need the best of everything. You don't need brand new trucks. And that's, I'm going to caution you right now, don't buy new vehicles. Buy something 7 or 8 years old that you can get around in. Buy an older van or an older pickup truck, whatever your business needs. You don't need anything new, because, to be honest with you, anything with the motor is a liability. Anything you buy with the motor is going to lose value the minute you pull off the parking lot. Even if it's used, it's going to lose value. So don't spend money on new trucks. Don't go buy the expensive tools. Don't go buy all that stuff. Buy the tools that you need, but you can always go back and buy better tools after you start making money. You don't want to go broke at first, because most people don't fail in business because they don't know what they're doing. This is something I want you to remember. I'm going to repeat myself. Most business do not fail because they don't know how to do their plumbing, electrical, air conditioning. They know how to do their skill set. They know how to do their job. They don't know how to run a business. They don't know how to manage their money. Some of the videos that we're going to do into this, I'm going to teach you how to manage your money, or talk to you about managing your money. But that's where businesses fail. The business of the business is what fails people. The business of the business is what people don't understand, because most of us, as we're coming through the trades, nobody talks to us about money. I personally talk to my students about how to manage their money well, and we're going to do that on the videos. So that's capital investment, is just take some cautionary steps and don't overspend right off the bat out the gate, because you're already in trouble, okay? Let's talk about investors for a second. Investors is one of those tricky situations. And if you got somebody that will maybe do a small family loan, or maybe go to the bank, which is what I end up having to do. I think I ended up borrowing $2,500, this is like 30 years ago, to buy some equipment that I need to do this specific job for. Get the money and pay it back as quick as you can, but do not let no one, in my opinion, be a partner in your business, because most of the time partnerships really do not work, because one person works harder than the other, one person is maybe more skilled than the other person is better at something than the other, and it creates conflict. Sometimes friendships are broke up, sometimes marriages are broke up because husband and wife are partners. I firmly believe partnership is not the way to go. But if you need an investor, if somebody will loan you that $5,000 that you need, write up in a contract, get it signed, notarize the legal document so he or she feels comfortable with loaning you this money, and go out and work hard, because it takes a lot of self-discipline to get out there every day and work. It's called delayed gratification. That means you got to put in the time, you got to put in the effort for those rewards to pay off. Okay, so now we've got our money. Now we're going to the bank. what type of banking accounts do I really need? The main account that you really need right off the bat is your operating account. What is an operating account? An operating account is one when the customer writes you a check, you're going to put it in the bank. When you write someone else a check, it comes out of that account. When you're running credit cards, it goes into that account. Any monies coming in and out of the company, regardless of what it is, if it's $1 or $1,000, it goes in this operating account, and then you have to balance that account out to make sure you're not overspending. You got to keep track of your money's coming in and coming out. We're going to talk about accounts payables, accounts receivables, and profit and loss. We're going to talk about those. Those are three things that you definitely need. You need to look at them every week, and balance sheets. That's what the fourth thing is for, to do balance sheets, because you want to keep track of money's coming and going. By doing that, you'll know what you're overspending on. You know what you're not spending enough on. But that's very important. But you got to have this operating account. That's your number one account. The next one here is business savings. The business savings account is after you've paid all your bills and everything's done. You've taken a salary, which you want to take as little as possible. You want to, if you live on $100, let's just say you make $100, you want to live on $70. You don't want to take it out, but you always want to save some money. So what I've done, at the end of the month, I would leave a certain amount in my account, whatever that amount was, and then anything over that account, I would put into my business savings account. And I'd pull that money in. Now that's money that hasn't been taxed yet. You still owe the IRS for that money that you're making, okay? Because we have to pay our taxes every year, okay? So you want to save that money. So at the end of the year, let's just say you've worked hard and you've done well and you paid all your bills on time and you're paying yourself a wage and all your employees a wage, and you have $100,000 left over. You pay your taxes on the business savings, and then you convert it to retained earnings. That's your third account. To me, that's the most fun account, because now I paid the taxes on this account. I put this money into my retained earnings account. Sometimes I left it in my business for a year or sometimes 2 years until I found something that I wanted to do with that money. And then after I got to a certain point and my house was paid off, I had no car payments, I was debt-free, which we're going to talk about being debt-free. I bought real estate. I bought investments. I did my 401ks. I did the Roths. That's things we're going to talk about. But that's what this money's for, is for assets. The 401ks and stuff, you'll be paying it out of this. Let me back up a second, because you'll get that write-off with the government, with the IRS. Folks, if you have any questions about what bank accounts you need, how you should set up your accounts, what you really should maybe even start with depending on your business, or you want to talk about capital investment a little bit, please leave me a comment, okay? I'm going to do my best to really help you guys. I have this passion to get out there and just help society, pay it forward. That's what I want to do. If you like this video, please share, please subscribe, and please comment. Thank you.